Hello. In 1776, when Adam Smith wrote the book The Wealth of Nations, he could possibly not have guessed that world wealth about 250 years or so later would have totaled $256 trillion. In fact, when Adam Smith was writing his book, the dollar barely existed. At the time, it was known as the Spanish dollar. This week, we've released the seventh version of the Credit Suisse Wealth Report. And this is important, I think, in a number of ways. One, we look at the wealth of all of the world's 4.7 billion adults. We don't just look at rich people, we look at the whole wealth pyramid from the top right down to the bottom of the wealth pyramid. Secondly, economists spend an awful lot of time talking about GDP, perhaps too much time. When if you interrogate the facts, when people make a big consumption decision, they think of their wealth. Are they more confident in the wealth outlook rather than are their GDP forecasts rising or falling? So wealth is really the basis for what households and consumers do, and it tells, I think, a couple of very, very important stories. First, from a very high level, in the last 3 years, we've really seen very little change in global wealth. I've been involved in this report now for the last 7 years. And usually we have an exciting story to tell about the rapid rise in wealth in emerging markets, etc. But the recent data tell a story of secular stagnation or maybe of the new normal. I think that's quite important in terms of what consumers across the world will do in the next couple of years. Secondly, and very topically, because we've just had the autumn statement in the UK, we estimate that in the weeks after Brexit, the total wealth hit to the UK was $1.5 trillion. The UK lost $422,000 millionaires, or another way, the median household wealth in the UK fell by about $33,000 to $286,000. And this is just in the weeks after Brexit. We haven't fully accounted for some softness in the property market and for further falls in sterling. I think to some extent the autumn statement will maybe support the housing market at the very, very lower reaches. I think importantly as well, there's some signs that Philip Hammond, the Chancellor, wants to build on the vision of the Prime Minister to have an industrial strategy. He's set up a very, very big fund for education and skill development. I think in the long future, that's going to be quite important. But he did underline the rather bleak state of UK government finances and gave a sense of the challenges ahead in terms of Brexit. In terms of other areas in wealth, we can't talk about wealth without thinking about the new US president. Given that he himself has spent so much of his time talking about his wealth. And in this respect, the US really does stand out, particularly in terms of it being the location to the world's wealthy. We estimate that at the very top of the wealth pyramid, there's about 140,000 or so people who are ultra-high net worth people. So they've got net wealth. And remember, we measure wealth as financial wealth, property, less debt. They've got net wealth of $50 million or more, and over a third of those are based in the US. And the US is by far and away the wealthiest country in terms of the concentration of ultra-high net worth people, followed by China. China is interesting that we've seen a slight extension of wealth inequality. So some of the very, very rich in China are getting richer. But China, I think, does stand out in that the overall profile of Chinese wealth is actually quite democratic. Most wealth is concentrated in the middle class, unlike India, where a lot of the wealth is at the bottom of the wealth pyramid. And that makes sense given the consumption trends we've seen in China in recent years. Finally, wealth inequality remains at a high level. The top 1% own about 51% of international wealth. That doesn't represent a big change on the last couple of years, but there is a sense of persistence at very, very high levels. And maybe that is one of the factors that's promoting political agitation and political change in countries like the UK the US, and possibly later on this year and next year in Europe. What's going to make wealth grow into the future? Valuations for equities, for bonds, for real estate are towards the upper parts of their long-term averages. Also, I think if you look at housing markets in some countries, they look stretched, maybe more so in the UK than parts of Europe. And also, I think debt levels in some countries are quite high. So we foresee a relatively modest progression in wealth into the next 4 or 5 years. Emerging markets should beat developed markets. And in some countries, I think people will be better off from the transition from financial assets to real estate. So hope, if you haven't seen the wealth report, it's available on our website or from your relationship manager. Thanks.